Hey everyone, welcome back to Corporate Decoder, the place where we break down the financial secrets of big companies, and today we're diving into Graphene and Solar Technologies Limited's latest annual report for the year ending September 30, 2024. And let me tell you, this report is a real journey. So what's the big story here? Well, it looks like GSTX is betting big on the future of clean energy, specifically solar power, and they're aiming to reshore that manufacturing right here in the US and Australian issues. That's exactly what they're trying to fix. Scrolling on a report piercing to Section 13 or 15D of the SEC Cities, Exchange East of 1934. They're talking about making silicon wafers, which is a key ingredient for solar panels, and get this, pretty much all of those are made in China right now. GSTX wants to be one of the first in the US to make these wafers locally by 2026. Graphene and Solar Technologies based. But here's where it gets interesting. Despite all this ambition, the company is still very much in the early stages of its business, and the numbers reflect that. Scroll net income lost this. Take a look at their results for the year ending September 30, 2024. They posted a net loss of over $2.5 million. That's a pretty big number, especially when you compare it to the previous year's loss of about $1.3 million. So the losses have actually doubled. Scroll to operating expense, and here's why. While they had no revenue at all, their operating expenses jumped significantly to $2.5 million. This was mainly due to professional fees for developing markets and financing efforts. Basically, they're spending a lot of money to get their plans off the ground. Scroll cash flows used in operating activities. Now let's talk cash flow. They used nearly $100,000 in operating activities in 2024 compared to about $72,000 the year before. This means their day-to-day operations are burning through cash faster. Scroll cash, speaking of cash, they have very little of it. As of September 30, 2024, they only had $1,845 in cash. That's barely anything to keep the lights on. Scroll working capital deficit, a shortage of cash to cover short-term expenses of over $3 million. This is a pretty serious red flag. Scroll going concern, the auditor even flagged their ability to continue as a going concern, which is a standard way of saying they might not be around in the near future. They seriously need to raise more money to stay afloat. Scroll up in a minute to public accounting. Firms, the auditors also called out the going concern as a critical audit matter. This means it was a particularly challenging part of their audit due to the company's heavy reliance on management estimates for future revenues and expenses that seem pretty uncertain right now. Scroll stockholders deficit, looking at their balance sheet, things are also pretty grim. They have a total stockholders deficit, meaning their liabilities are much higher than their assets of nearly $2.8 million. Kroll common stock. Even though they've issued a huge number of shares, over 569 million by September 2024, it hasn't translated into a strong financial position. Scroll other receivable, interestingly, they did receive a research and development tax incentive from Australia as a receivable of almost $9,000, but this is likely a one-off boost. Scroll net loss of company strategy to reshore solar manufacturing is ambitious and could be a game changer if they pull it off. However, the current financial reality is stark. They're burning through cash at an alarming rate, have very little liquidity, and are facing significant going concern issues. Scroll number of shares beneficially. And it's also worth noting who the major players are here. Jason May, their CEO, and a director seems to hold a significant chunk of shares, over 40%, which is common for founders, but it also means his interests are very closely tied to the company's success. Overall, Graphene and Solar Technologies Limited is a company with a bold vision in a growing industry. Their focus on reshoring solar manufacturing is a strong strategic play. However, the financial reality is concerning. They are burning through cash rapidly, showing significant increases in losses and have minimal liquidity. The auditors have even raised doubts about their ability to continue operating. The company desperately needs to secure substantial funding to execute its ambitious plans. Without it, or if their strategies don't translate into revenue quickly, their future looks very uncertain. It's a high-risk, high-reward situation for investors betting on their ability to navigate these early-stage challenges and capitalize on the growing demand for renewable energy. So what's your take on GSTX's future? Will they succeed in their solar revolution, or can they even survive the next year? Let me know your thoughts in the comments below. If you found this breakdown helpful, give this video a thumbs up and subscribe to Corporate Decoder for more deep dives like this. And don't forget to join our Discord community, linked in the description, for more exclusive content and discussions. Thanks for watching, and we'll see you in the next one.